Welcome back. Now, Canal Plus has its sights set on Multichoice. The French entertainment giant made a 46.5 billion rand offer to buy Multichoice with the aim of creating a global powerhouse by combining the two entities' businesses. We're now joined by senior investment analyst at Protea Capital Management, Richard Cheeseman, with his analysis of the move. Thank you so much for your time, Richard. Now, before we get into the nitty-gritties of the possibilities of this buyout offer, what are the chances of success for Multichoice in its current form? Has it just been surviving or has it been thriving in some way?
It's been very difficult for Multichoice recently. It's made a lot of investments for the future, such as in its BetKing operations and the recently launched Showmax 2.0. But subscriber numbers have been under pressure, and especially in the group's African operations, currency movements have made it very difficult for Multichoice to be profitable.
Now, Canal comes in today, and we get the sense that it wants to buy out the rest of the shares in Multichoice that it does not already have. So Canal Plus at this moment has a shareholding of 31.7% in Multichoice. Without this buyout offer, if it were to gradually accumulate more of the shareholding to the point where it gets to 35%, what would the mechanics of a mandatory offer look like?
Well, I believe that if you consider the January shareholder register, Canal Plus has been buying shares probably just below the 35% mandatory limit right now. So once they've reached that, and this is probably the reason why they have had to make this offer, they do have to make an offer which will be at least the highest price that the company's paid within a certain period of time for those shares.
Well, I mean, it wants the whole company now. Firstly, what is Canal Plus seeing in Multichoice?
Sorry, say that again?
So, because now it wants the whole company, what is Canal Plus seeing in Multichoice?
What they're seeing is a very complementary geographic exposure on the continent. Multichoice is predominantly in the English-speaking African countries, while Canal Plus is generally in the French-speaking African countries. They've got very little overlap. So if you put the two groups together within Africa, that creates quite an attractive mix. There are a lot of synergies that the companies could realize, such as satellite cost savings, bidding for content together, saying you just come speak to one person and we'll be able to put your product in front of the whole African continent is quite an attractive proposition. So I guess those are the main features that Canal Plus is seeing.
Well, let's talk about what Multichoice could get. Does Multichoice actually need Canal Plus in this capacity, considering also how much money they need for the investment into Showmax? Today, they also gave us an update on the investment that they have already put in and the investment that will be needed before the end of the financial year.
I wouldn't say they need Canal Plus, but I think it's a lot more attractive if they come together. For example, Multichoice has just started turning around its African operations, which have been loss-making for quite a period of time. And they've generated significant tax losses within those countries. Combining Multichoice with Canal Plus within Africa, they'll be profitable a lot sooner and they'll be able to utilize those tax losses much more quickly. So I think there will definitely be a benefit from the combination, but I don't think it's critical for the group. They already have quite a dominant position on the continent.
All right. Well, let's talk about that offer price. So Canal Plus has come in offering 105 Rand per share. What do you make of that premium offer and the reception from shareholders?
Obviously, it's a 40% premium to the price of yesterday. But it's a much smaller premium to the price of 2 weeks ago, and it's still a discount to the price of just under a year ago. In March, Multichoice share price was at over 140 Rand per share. So I think it's a first offer, but I wouldn't rule out any subsequent increases to that offer if shareholders aren't receptive to this current price.
All right. I mean, assuming that they are pleased today, but of course, we do know how these negotiations go. You're right. We might get to a point where maybe shareholders think that they do need more. And just as we wrap up the conversation, Richard, would the combined entity of Canal Plus and Multichoice be enticing to investors, seeing as though, Canal Plus says that it would like to list in South Africa?
I think it would be. Yeah, it's quite interesting in that just 2 days ago, I think Vivendi announced that they were breaking up the group into 4 components, one of which is Canal Plus. And, a combination of MultiChoice and Canal Plus being listed in South Africa sounds quite appealing for those reasons that I mentioned, all the synergies that the group would be able to achieve together. So it's unfortunate that there's no share components to this offer. It's just a cash offer. But shareholders would be able to reinvest potentially in that new entity on the JSE at some point. And considering the valuation and those potential synergies, it seems quite attractive.
Well, thank you so much for your insights on that buyout offer. Of course, we will be keeping a close eye on those developments. That was a senior investment analyst at Protea Capital Management, Richard Cheeseman.